Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the market insights for Friday, February 26th. Brexit, the question of whether the UK will leave the European Union, is on everyone's mind nowadays after UK Prime Minister David Cameron called a referendum for June 23rd. Will they or won't they? That's not necessarily the right question for the FX market, at least not for now. The proper question for the FX market is, might they? And the answer to that one is a definitive maybe. So long as it's maybe and not no, I think the pound's likely to be under pressure. The problem is that I don't see things on the continent getting better anytime soon. In particular, I think the refugee crisis may worsen as the weather improves. Unfortunately, a lot of the people in Britain who want to leave the EU feel that way because of immigration. That's why I think the risk of higher poll numbers for the outvote may increase. We can take some lead from the Scottish referendum on independence that was held in September of 2014. While in the end the vote went against independence, it was noticeable that support for leaving rose as time went on, while declared support for staying in fell. In the event, the vote to stay in was higher than the polls had suggested, but so too was the vote for leaving as the I don't knows made up their minds. The latest polls show some 46% want to remain in the EU and 38% want to leave, but that's almost exactly where we were with the Scottish referendum 4 months before it took place. 48% no versus 35% yes. And it tightened up considerably after that. At the end of the day, I don't think the British public will vote to leave the EU, but the market has to price in the chance that they might. That means a weaker pound. Now, investors who want to take a position on the possibility that the UK leaves should do so by selling sterling against the dollar, or even better, sterling against the yen. That's because if something with such wide-ranging and unpredictable implications does actually happen, the safe haven yen is likely to appreciate overall. It might also be worth considering buying gold with sterling, because gold too could benefit. On the other hand, I think the euro would also be negatively affected in case of a vote to exit, although obviously not as negatively affected as a pound. That's because not only would a vote to leave the EU be a leap into the unknown for the UK, it would also be a leap into the unknown for the EU itself, too. All sorts of questions arise, such as, what will the people in Catalonia or the Basque region do? How would this affect the chances of anti-Euro parties, such as the National Front in France, etc., etc.? The issue could put downward pressure on the euro over the coming months as investors begin to think through the impact of a Brexit vote on other currencies besides sterling. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.